Welcome back to another video, everyone. In this one, we're going to be going over 5 stocks that you guys absolutely need to have on your radar going into June of 2025. Now, in addition to this, we're also going to be going over a little bit about the broad market and some of the key risks as we go into the next couple of months here, because again, we can't just think about the positives. We always have to think about what could potentially play out in the market from a very positive perspective and also from a negative perspective, depending on how the market wants to react to a lot of the new situations that have been unfolding here. So before we get into all of that information, if you guys do enjoy the information and analysis that I provide for you guys in these videos here, make sure you go down and hit that like button. Costs you nothing to do it, but it helps me out a whole lot. Let's see if we can get this video to 500 likes. That would be awesome. And again, make sure that you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. And also shout out to all of the members of my private trading and investing community, Less Trades, More Profits. If you guys want your gains to start looking like the ones from the members that I'm going to put up on screen right now, make sure you guys check out that link down below and use code MAY. You guys get 50% off your first 2 months to the private community there. Again, this is the most insane deal that I am ever going to be running. We'd love to have you in there and start showing you how to take full advantage out of everything that the market has to offer here. So let's first start by talking a little bit about the risks going into these next couple of months with the market here. Now, as we all know, we did see that Moody's credit rating downgrade on Friday. It wasn't the best news. It wasn't the worst thing in the world here. But again, it wasn't a positive development for the market. And again, we have seen the market trade a little bit lower this week, especially after that lackluster bond auction, the 20-year auction that we saw yesterday. Now, the reason for a lot of this uncertainty here is because the market has been really expecting one thing to play out this year, and we are starting to see the exact opposite thing. Now, what I mean by that is that we heard a lot from Trump during his campaign and as they started to get into the beginning of this new administration, that they were going to look to cut spending, they were going to use Doge to accomplish that, and now with where we are at now, that is not looking like it's going to be the case at all, especially with this new spending bill. Now, the problem with that, even though that about 25 to 30% of GDP every single year is going to come as a direct result from government spending, well, if the government is going to be increasing the amount of debt that they have and increasing really the amount of spending, well, they're going to need to go into more debt, and that means going out and providing more supply to the bond market, potentially pushing up yields. Now, that leads to a lot of very negative effects in the overall system. Mortgage rates go up. Again, the cost of owning a home becomes more expensive, and if we do not see these home prices move down, again, that creates a very big problem in the housing market. And in addition, when you think about the potential of the spending to get out of control and for other foreign nations to get a little bit more cautious when it comes to investing in the United States, well, it provides a path, a negative path, that the Fed might have to come out and start monetizing the debt, which effectively means printing more money and going out and providing that bid to the Treasury market in order to artificially lower yields. Now, again, this could create a very, very vicious cycle of inflation moving to the upside. Consumer sentiment, as we can see here, again, could continue moving down, and then we could start to see even lower levels of consumer sentiment and also retail sales moving down as well. Now, that is a very, very negative scenario there. And that is what the market started to price in a little bit earlier this week. But again, I don't think that that is the most likely outcome here, because if you've been paying attention to a couple of the videos that I posted over the last couple of days here, it's the market really needs to start thinking about the growth initiatives coming in really over the next couple of quarters here, and less so on kind of this flip-flop from going from potentially balancing the budget here and lowering the amounts of government spending to where we are now. It's not like the market isn't used to this overly crazy amounts of government spending. It just wasn't what they were expecting. So what the market really needs to start focusing in on moving forward here is these new growth initiatives from this new administration. Because when you think about what the global market needs to see to continue moving back into United States markets here, is going to be a higher degree of confidence that the United States government has an increased ability to generate revenues. Now, again, they don't want to see those, let's call it, revenues from selling bonds and going into more debt. What they really want to see is the ability for more businesses to be making more money to then again have more income, have more revenues, and then their taxable obligation to the government is going to be more, and the United States government is going to be able to collect more revenues. Now, through these new trade deals that we could see unfolding over the next couple of weeks and months here, again, we are seeing increased access given to United States businesses, which again could further increase GDP. Now, again, on that other note there, very quickly, about the Fed monetizing the debt, we did see a comment from Waller today, Fed won't buy bonds in primary auctions. Again, this is a good sign that they're not looking to, again, print money to go out and buy bonds in the short term here, which again would further increase inflation, drive consumer sentiment lower, potentially decrease growth, and have a lot of other negative effects on the system that we are currently seeing. And even though, again, I just briefly brought this up earlier, but I do want to touch on this before we start talking about these individual stocks here, even though we are seeing consumer sentiment at these very, very low levels here, levels that we have not seen since 2022, one, it is starting to bottom out, but two, we have not seen a meaningful impact to retail sales yet, which again, you are seeing the consumer say one thing and then act in a completely different way. If we were to see retail sales and overall consumer spending significantly moving to the downside, let's actually pull up this consumer spending chart right here. Again, when we take a look as a whole over this consumer spending data, we are really not seeing any of those negative effects as of yet. So the real risk to the market here is that treasury yields continue to head higher and continuously spook the market. But again, as you're seeing here, yields are starting to move back to the downside today as the market kind of gets used to that status quo that has been in place over the last couple of administrations here. So let's go over this first ticker here that everybody needs to be paying attention to, and that is AMD. So again, those of you guys that have been around this channel for a long enough period of time know that I own AMD shares at $11.39. This has been one of my most successful investments over the years here. I know I look young. I'm going to be 26 actually next week here. I've been learning about markets, guys, trading, investing, since I was 14 years old from some of the most successful financial professionals in the world. So I've been in this game for a long period of time, and AMD is looking like it is setting up for some significant movement to the upside. We've had a lot of positive news on AMD over the last week or so here. Again, one of those is that new partnership with Humane out of Saudi Arabia. We also have that share buyback. We also have AMD selling off the manufacturing business of ZT Systems. But when just looking at the chart here, we have shifted out of this downtrend and are now starting to retest a couple of these prior highs that AMD could not push through before here. So what I would be looking for out of AMD in order for me, let's say in the short term here, if I was looking to take a trade on this, is a clear break of this recent high of 122, because that is going to get us above that 200 exponential moving average on the daily time frame. And again, with all of the positive news that we've seen out of AMD and that we are looking to continue to see moving forward, this one could have a lot of success in the summer months. And with the sell-off that we've had here, we do have a lot of potential upside ahead. Now, the next name that we're going to be talking about here is probably my highest conviction idea in the healthcare space, and that is Novo Nordisk. So just looking at the chart here, guys, we have an incredibly bullish setup coming off of these lows. We have Novo Nordisk forming a base right on top of these 2022 highs here. It has struggled to get through this $70 area that we see here, but once we're able to crack through that ceiling, I think this one is going to move very quickly up into the mid 70s and low 80s, depending on what type type of news is going to continue to come out with this company here. Now, in addition to this, the market, in my opinion, is making a pretty big mistake with the way that they're pricing Novo Nordisk in terms of their valuation right now. When we come over here and take a look at their revenues, again, we can see that once a lot of these new weight loss drugs came into the picture, Ozempic, Wegovy, we saw Novo Nordisk revenues absolutely explode here. Now, if you're going to make the argument to me that Novo Nordisk is going to trade at almost the same exact valuation now that it did before all of this revenue was coming in from these weight loss drugs, and we're continuously seeing that revenue come in, I don't really understand that argument, and I think this one is very undervalued at current prices in the market here. Again, we've also had some very positive news coming out with this name as well here. Cigna announces new deal for copay caps on Eli Lilly and Novo Nordisk weight loss drugs. The company hopes the new discount, which caps monthly out-of-pocket costs at $200 for Wegovy and Zepbound, will convince more employers to offer coverage of these drugs, potentially getting these drugs into the hands of individuals that wanted to take these weight loss drugs, but were unable to due to the fact that in the United States, they cost a decent amount of money. Now, in addition to this, when we move down here, these new arrangements by Evernorth and CVS Caremark could bring those net prices even lower for employers, just as the government is negotiating Medicare discounts for Novo Nordisk, Ozempic, and Wegovy under the Inflation Reduction Act. Those Medicare negotiated rates will take effect in 2027, effectively making Novo Nordisk products the preferred drugs in the program. That could see prices come down even further once the drug is negotiated. It must be featured on formulary in Medicare, which again is basically just a list of medications that are covered by that program. And so that means if you're Eli Lilly, you have to try to compete in the Medicare market with a product that's going to be on formulary and have an artificially lower price. And one of the main reasons, again, why you saw Novo Nordisk selling off so aggressively after it made such a significant move to the upside is that the market was getting a little bit worried that Eli Lilly was catching up on Novo Nordisk's lead in the GLP-1 market. But even then, I think what the market has kind of done to Novo Nordisk here is very, very overdone, and this one should start moving back up towards that 200 exponential moving average in the near future. Now, in addition to all of that positive news, we did also see some more news come out with Novo Nordisk just today. Wegovy maker cuts weight loss drugs price to $199, but there's a catch. The Danish drug maker Novo Nordisk announced it has temporarily reduced the price of weight loss drug Wegovy for new customers as it attempts to limit sales of compounded versions of the medication, which compounded versions are effectively just like knockoffs of the original medication. Novo Nordisk will sell a 1-month supply of Wegovy for $199 through June 30th for patients who previously took compounded versions of the medication. In my opinion, this is very, very solid news here, as you have an already large base of customers that were taking these compounded versions that decided to go for the lower priced option, even though it was a compounded version. The fact that Novo Nordisk now is going to be coming in and saying, okay, we're going to offer you the ability to have kind of the better versions of these drugs at a lower price initially, could easily give them more customers in the short term here. The announcement coincides with a federal deadline on May 22nd for manufacturers to cease distributing less expensive compounded versions of the drug, which is already most likely going to give Novo Nordisk a boost in their GLP-1 sales anyway. But again, nothing I say in these videos, guys, is financial advice. You guys got to do your own research out there. Not all of the news that is coming out with Novo Nordisk is positive. We did recently receive news that the CEO is going to be stepping down in the near future, kind of amid concerns of what's been happening with their share price, and they're really trying to turn things around. Now, the next name that I want to talk about with you guys is Tesla here. This is another retail favorite, and something interesting that's happened with Tesla recently here is that Tesla actually traded higher after their last earnings report, after issuing very, very bad numbers here. Tesla reports 28% drop in auto revenues as first quarter results miss Wall Street estimates here. Now, just from a technical perspective there, that is a very, very solid sign, and one of the reasons why you've been able to see Tesla continue to the upside here in the short term, and also has a very, very bullish daily setup here leading into the next couple of weeks. Again, this was one that we were able to nail this first little breakout here within the Less Trades More Profits community. So congratulations to all of you guys that are in there, absolutely crushing it with us. But again, we are looking for this round 2 move here. If we can break above this 354.5 area here, we easily could see Tesla make a very strong move up to that $420 a share area. But again, seeing the market again react positively to those bad numbers really kind of goes to show, just from a technical perspective, that this area right here, Tesla was getting very washed out and the market was ready to take it higher. Now, recently this week, we also saw some positive news for Tesla out of Elon Musk here too. Again, one of the things that he did end up saying was that he does plan on remaining CEO of Tesla for at least the next 5 years. And again, he talks about some of these delivery numbers and these sales numbers, and Elon Musk comes out and says it's already turned around. When asked for evidence that it had turned around, Musk said Europe is our weakest market, but we're strong everywhere else. Our sales are doing well at this point. We don't anticipate any sales shortfall. But again, when it comes to Tesla, we always have some of these similar kind of risks and concerns with the company. And one of those is Elon Musk does love to come out and talk very positively about a lot of his businesses there. And in some cases, the statements that he makes are just not true. So again, the only real way to really figure out how Tesla, the business, is doing is going to be when it reports its earnings. And then the second one, obviously something that we've seen play out over the last 6 months here, is Elon Musk increased activity in the political landscape, and that has kind of alienated 50% of his potential customer base. Now, as time goes on, I think that's going to become a lot less of an issue, especially as Elon Musk has said over this past week that he is going to have a much smaller role, if any, in politics moving forward. Now, next up on the list here, we have Google. Now, Google has had a very, very volatile start to 2025 and is still trading down about 8.6% on the year, as investors have been very concerned and worried and really wondering about what Google's role is going to be in this new landscape as it comes to search. Because remember, why would you then decide to use Google's legacy search feature when you could just go in and ask ChatGPT or Grok or any of these other different large language models for the answer to the questions that you have? There's a big shift happening right now, and Google needs to really make investors more confident that they're going to be able to remain a key player and one of the best performing players in the artificial intelligence and search space. But that's exactly what they've been doing really over the last week or so here. Google parent Alphabet stock is rising amid growing optimism about AI search here. They unveiled a $249 per month AI subscription service that Bank of America expects to be competitive with OpenAI's ChatGPT Pro. And again, they also unveiled and rolled out its new AI mode offering in the US. And you can see some comments from these JP Morgan analysts here as well. We come away more confident, very, very important there, that Google can successfully navigate the shift to AI search, which is why you are seeing Google perform very, very well this week, even though the overall market has been very volatile, with Google trading up about 3.84%. Now, in addition to that AI mode that Google is offering, we also have some other key developments with Google that were released this week. Again, Google on Tuesday announced Veo 3, an AI video generator that can also create and incorporate audio. The artificial intelligence tool competes with OpenAI's Sora video generator, but its ability to also incorporate audio into the video that it creates is a key distinction. The company said Veo 3 can incorporate audio that includes dialogue between characters as well as animal sounds here. Now, again, the video AI tool is available Tuesday to US subscribers of Google's new $249 a month ultra subscription plan, which is geared towards hardcore AI enthusiasts. Now, something that Sundar actually said recently, the CEO of Google, at a conference this week, or I believe it was a podcast with All In, was that what they are planning to do with a lot of these new models and tools that they are releasing is that as they start to roll out new tools, the cost of the old legacy tools is going to either go down significantly or actually become free to users here. So over time, and again, we are seeing overall AI development rapidly increase here. We could easily see over the next 3-6 months, maybe even 8 months here, 8-9 months, that some of these tools are free and available to everybody here. And they've also hinted at the fact that they could also incorporate ads into a lot of these kind of models here as well in order to be making money off of these free or freemium tiers that they could potentially offer in the future. So in general here, this has been a very, very critical week for Google, as they've really given investors a lot more confidence that they are going to be able to compete in the AI space, in the search space. And again, like I said before, was why Google is outperforming the market this week so far. Now, let's get into the last name here, and that is going to be Sofi. So again, another retail favorite. And this is also one that I own at a very, very solid entry price at $6.55. This name has performed very, very well for me, really over the last year or so here since I bought it, down at, I believe it was right on this day here as well, right in the beginning of July. But with what we're seeing out of Sofi here, in terms of their overall financials, we are seeing them in very, very good shape, but we are also seeing some very solid goals being released for Sofi, as we can see here at the recently held JP Morgan Global Technology, Media, and Communications Conference. Sofi CEO Anthony Novo said that the company expects more than 30% annual member growth and mid to high 20% revenue growth, while reiterating a goal to reach 50 million members within 5 years. Just to put this into perspective for you guys, Sofi currently has around 11 million members across all their product offerings there. So seeing over the next 5 years, Sofi get up to that 50 million member number, again, that is absolutely insane growth. Now, again, it's going to take a lot for them to get there, but with the continued innovation and development of products that they have continuously been doing, again, they're coming out with options in the near future. And I think most importantly here is Sofi CEO says fintech bank is bringing back crypto investing. Now, again, Anthony Novo has not just talked about this as the ability to buy and sell crypto, but also the ability to take out margin loans against your crypto, to be able to pay with crypto. Again, having the ability to fully integrate crypto into kind of people's everyday financial lives here is something that Sofi and their management here wants to accomplish. And with this new crypto-friendly administration and the ability for Sofi to come back into the crypto market can absolutely be something that not only drives user growth, but revenue growth as well. Now, back looking at the Sofi chart here, again, in my opinion, this is kind of in no man's land right now. This is not something that I would want to buy. It's not something that I would want to short, really, for any short-term moves. But what I would like to see is kind of coming back down and potentially testing this 200 exponential moving average here on this daily time frame. If we do end up seeing that, again, I think I might end up actually buying more shares of this name here and potentially averaging up, because I do have a lot of confidence that Sofi is going to continue to outperform over the next couple of years here. But again, as I said before, make sure you guys do some more research into these names here. I can't really go through all of the different elements and the risks to each individual name, and I always want to make sure that you guys know exactly what you're buying before you do. But guys, that is going to wrap up this video here. If you guys did enjoy the information and analysis I provided for you guys in this one, make sure you go down and hit that like button. Costs you nothing to do it, but helps me out a whole lot in spreading this information out to as many people who actually want to learn. And again, if you never want to miss another video like this, make sure you guys are subscribed, turn on notifications so you're notified every time these videos do end up getting posted live. But until next time, guys, I will see you. Peace.